expenditure for computation of business income. This includes tax as well as surcharges. The health and education cess is imposed as an additional surcharge on the taxpayer for funding specific government welfare programs. However, some courts have allowed health and education cess as business expenditure, which is against the legislative intent. To reiterate the legislative intent, I propose to clarify that any surcharge or cess on income and profits is not allowable as business expenditure. Deterrence against tax evasion. Honorable Speaker, sir, presently there is ambiguity regarding set-off of brought forward loss against undisclosed income detected in search operations. It has been observed that in many cases where undisclosed income or suppression of sales, etc., is detected, payment of tax is avoided by setting off of losses. In order to bring certainty and to increase deterrence among tax evaders, I propose to provide that no set-off of any loss shall be allowed against undisclosed income detected during search and survey operations. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I propose to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 rupees during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something not part of my speech, but worth putting in here for the knowledge of the Honorable House. I would like to bring to the notice of this House that the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic growth, recovery, post-COVID, This has been possible due to the rapid economic recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the Customs National Portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods. National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create an employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades, in some cases have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honourable Speaker, sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods.